We're finally back, boys. Tesla has pushed through that liquidity level, and it seems now that we have filled this gap that as long as tomorrow we close strong, that we should see Tesla back up at $300 much sooner than expected. My goal and my target for Tesla has been 300 for the end of the year. Tesla has been one of our best tickers to trade this entire year. You guys know that it's the only ticker that we really trade publicly. And so far this year, we're up $612,440, and we haven't even hit the target yet of $300 that we've been expecting for the end of December. Now, the past couple of weeks, you guys know that I've had February calls. On top of that, I've also very recently put some puts on the table. I got some October puts, and the reason for that, which I would take this every single time, is that yesterday we saw a weak close in the market. On top of that, we had 3 days in a row where price was showing lower highs on the BX trender, which is the indicator at the bottom of your screen. You're going to see that when we get higher lows into higher highs, price runs aggressively, and that's what we're normally looking for. However, when price is making these lower highs, normally it's going to sell off. So we were expecting price to come back down maybe one more time to $220. That was going to be where I took my October puts off the table. And then from there, I was going to average down on my February calls. Now, instead, price opened up today around $234 and pushed up to about $236. It's at that point that I decided I wanted to go through and close out my calls. So I actually closed out my February calls here, you can see, for 6%. So these are just my Tesla trades. The 2 trades I took today was this profit for 6% on the February calls. I'm still holding my October puts, which is a hedge. And what I did was, instead of holding on to these, I opened up a better, at least what I would consider better, position. Now, the reason I opened this position was so that I could be more aggressive with my delta. We did a very intensive delta hedging video on Tesla a couple of days ago that I highly recommend you go back and watch. I will try to remember my hardest to tag it at the bottom when I post this video later. But basically, up until this point, I've been holding calls and I've been holding puts, but my negative delta has outweighed my positive, meaning that I have been more bearish on Tesla for the past 2-3 days than I have bullish. So as soon as this morning session opened at 9:41, I said to myself, all right, we're probably going to break out here. And I could close my puts and I could just hold on to my February calls. But remember, right, this is the biggest thing. I only had 50% of what I wanted in those calls. So I only had about $120,000 in those calls, which is obviously a lot of money, but relative to the fund, it's not that much. And so I wanted in total about a $200,000 to $220,000 position for the next 6 to 12 months. And my plan was to see if price was going to pull back to 200 and 190. That was going to be my average down point. Well, here, now that price is through this liquidity level, I doubt that we're ever going to see $200. There's a chance, but I doubt it. And so what I decided today was that I would close out the Februaries. I'd hold on to my October puts. So this way, if we get a short-term stark rejection, then I will actually get some money back there, but it won't hurt my longer time frame position. So what I ended up doing was opening up 75 calls on Tesla, which are going to expire March. And this time I went with $250 calls. So I went with a strike now that is further out of the money. This is more aggressive, but the reason that I did that was because having a $230 strike as Tesla's moving into 240, 250, 260, it's not going to be traded much, and not a lot of people are going to want to buy it. So I want to be trading something that in a couple of months from now is going to be not so far out of the money that nobody wants to trade the contract. You can see that I went in with 50 and then another 25, and you can actually see that I took 25 off the table today for a profit of $8,000. So I'm still in with 50 of these. I closed near highs today just in case Tesla pulls back, but at this point, I'm still holding a sizable position in Tesla calls. And I think tomorrow, as long as we can close here with this weekly candle like this, which I'm 90% sure we can, but we have to see, price could reject. But if we can close here, I think that Tesla is easily going to be pushing up to 280 and 300 by the end of this year. Let me know what you guys think down in the description. Let me know if you think I'm crazy. And at the end of the day, I hope you all had a great one. If you want to learn how I made $1.5 million this year so far using predominantly one indicator, which is the BX Trender, then go check out our Elite Traders Playbook course. It is completely free. It is the course where we go over the BX Trender in depth. We go over exactly all of the settings I have for it, the exact requirements that need to be met in order to take a position, and best of all, I give you guys a PDF checklist of exactly what must occur in order for you to enter a position and exactly where I personally would be setting take profits and stop losses. I hope to see you guys over there.